Good evening, friends.
Good evening.
I am very happy to have with us my colleague Vineet, who is the chair of the Delhi chapter,
Thank you.
Charlotte, who is the director of meetings at FENG, Connecticut, and Sundar, who is going to be the speaker. Sundar is a chartered accountant with over 25 years experience in various industries, including manufacturing and service sectors. During his tenure, Sundar has held various positions, including a director, CFO, finance head for various businesses in India. His last assignment was with Pfizer sterile injectable business, and he was the Asia Pacific region finance business partner for nearly a decade, where he focused on driving growth and improving profitability. Earlier responsibilities including leading the finance and compliance functions at various leading companies. Sundar has been a resident director on the board of Pfizer Group of companies with a gross investments of nearly $1.2 billion in India. In this position, Sundar had put in place process optimization initiatives, sustainability reporting practices, compliances and governance practices, and was also standardized and harmonized policies and reporting procedures. Prior to joining Pfizer, he was working with the non-banking arm of Bank of America Merrill Lynch and Hewlett-Packard, among other companies. Currently, Sundar is a virtual CFO and providing enterprise risk assurance services as a partner in FinYes Consulting. Over to you, Sundar. Good evening, welcome.
Thank you, Arun, for the kind introduction. Thank you, Vineet, and thank you, Charlotte, for organizing the session. Today, our topic is ESG, BRSR reporting. BRSR, as we all probably know, is business responsibility and sustainability reporting. India is aligned with the rest of the world on ESG practices. There is now a mandate for the top 1,000 companies in India to report out starting this year on their ESG and sustainability in climate and environment and governance related issues. And what we'll see today is about how the environment, social and governance aspects talk about planet, people, and then if we take care of the planet, by taking care of the people, it'll automatically take care of the corporate profit. So that's the objective today. As part of the session, we will see what are the requirements. We will see how the best companies in India are fulfilling that requirement and what they have disclosed as part of their reports, the integrated reports, which are today the new avatar of the annual reports. With that, we will start. We'll see what is ESG during the session. We will take a quick look at the global landscape. We'll see some components of what goes into ESG. We will then look at the landscape in India. We'll look at the 9 principles. We'll spend a little bit of time on the 9 principles and the statutory requirement. And then we'll go into the actual subject, which is the BRSR framework and the structure. We'll take one look at one thing we've all been familiar with for the last 10 years in India. In 2012, SEBI introduced the business responsibility reporting requirements for the top 100 companies. And since then we've graduated, we've come a long way in terms of stability of that process. So we will then move from BRR to BRSR and see how the transition, what the transition calls for. We will then head into what are the disclosure requirements under the various sections. There are 3 sections and we'll take a look at that. And we'll see what the implementation approach is and how we suggest that companies should go about the implementation. We will then, once that is done, we will have some time for questions and answers. In the meanwhile, as we go through the various slides, in case you have any questions, feel free to ask the questions. There is no requirement to actually wait till the end, but if you would like to wait till the end and ask the question, that is also more than welcome. With that, we can probably start with what is ESG. So primarily it is the standards that are set that will help a company to reflect on its social consciousness. There are three legs to it: the environment factors, both the impact of the company's operation on the environment, as well as the environment's impact on the risks that it could reflect on a company's operations. So both sides of the environmental factors. Similarly, on the social factors, the relationship not only with the employees, but with everybody around, all the stakeholders, the neighborhood in which the company operates. And then the governance. Most of us are very familiar with the governance aspects. All the board committees, the secretarial audit reports, etc., speak to a great length and has been an established practice in all the Indian companies. So we have got governance in terms of diversity of the board, the leadership, the remuneration of the board, the differences and the ratios of difference between the first level of workers and the board and the directors itself, independence in terms of financial auditing, reporting, etc. And these are fairly well established practices in India. The global landscape of ESG is then split into four parts. You have the goals and the principles which are set up primarily by the Sustainable Development Goals. The United Nations has brought up the SDG goals. There are 17 goals. Those goals are supplemented specifically on the area of climate by the Greenhouse Gas Protocol, which has given us various calculation formulas and standards with respect to the greenhouse gas calculations and climate change. There are multiple regulations in effect. India, of course, has the SEBI bringing up the BRSR regulations. Europe has got its own taxonomy regulations. Similarly, there are corporate sustainability reporting directives which are available. There are TCFD related standards on climate risk reporting. And similarly, there are sustainable financial disclosure regulations in other parts of the world. Those regulations then have to marry into the reporting frameworks because the reporting frameworks are based on them. So multiple reporting frameworks. We have the GRI, which is the big brother of everybody. SASB is coming up as a place where everybody wants to align over the next few years. India's SEBI BRSR is another major one, and we are probably a little bit early in that game because other than GRI, we are probably among the earliest of the regulations that is specifying a reporting framework in India. Most of the Indian companies that have been reporting currently report under GRI. So you have the larger companies which have an established presence across the world, and also especially those who have already got their ADRs listed, the American Depository Receipts listed. Almost all of them have been regularly reporting under GRI standards. The good thing is, when we look at the BRSR, SEBI in its wisdom has actually said, okay, if you are already reporting under any other standard, including GRI, all you have to say is, okay, under this point, this is what I'm reporting under the other standard, and specify that. So you don't need to really reinvent the wheel. All you need to do is link up those responses and provide those metrics wherever that information is called for by the BRSR. This is one aspect, and this touches on the goals, regulations, and reporting. And then you have a completely different animal, which is from an investor perspective, how is it looked at? There you have multiple, there is no one standard. And that is where life gets a little bit more interesting. So you have Bloomberg, which has its own requirements. You have Moody's, the MSCI of Morgan Stanley. You have the Dow Jones Sustainability Indices. You have Morningstar, which has come up with its own requirements. You also have S&P Global. Like this, virtually everybody has got their own ways of ratings. And none of these are standard. This is all from the investor perspective and the mutual fund and rating house initiative perspective. You also have banks and financial institutions that have their own rating indices. So since that is such a different beast, we probably will not touch on any of those aspects today. That's a topic for another day. Some components of ESG that we can quickly look at is environment. So when we look at environment, we mean the carbon footprint, the energy usage, what's the impact on waste management practices? Is the company doing anything for natural resource conservation? How are they handling contaminated equipment or inventory and how are they handling hazardous waste and toxic emissions. So these kind of things. Similarly, on the social aspect, where not only are the employees looked at, but vendors, the local groups, the area in which that particular company operates, the people over there. In terms of equality, this particular aspect, this pillar of social equality touches on gender, race, religion, human rights, all the opportunities that are supposed to be afforded in a good climate. All those aspects are touched on as part of the social pillar. The third pillar is the governance pillar. This, I would say, from an India perspective, is probably the most well set. Transparent accounting norms, following a set of standards which are fairly well established. Investor relationships, the strength of the analysis, the strength of the analyst discussions, board conflicts of interest, disclosure practices with respect to how conflicts of interest within the board are handled, the ethics that are there, and some companies are obviously better known for their ethics than others. The opportunity of being heard, prevention of sexual harassment in the workplace, political influence, how companies influence public policy, what are their legal practices, what is their whistleblower policy, all these aspects are touched on. So each one of this is an area that needs to be covered as part of a sustainability report. When we say ESG report, it will have all these things and a little bit more. What we will see in the next few slides is exactly what gets covered and how it will get covered. The landscape in India is, I will not go into the detail of this, but very simply, the business responsibility report started off in 2012. And Bombay Stock Exchange launched the GreenX and the CarbonX. The first time it actually spoke about carbon emissions and an index with respect to how those go into a company's listing agreements. Today, of course, in 2019, the Ministry of Corporate Affairs came out with a guideline, and that is the guideline that is being implemented today, effective 31st March 2022. The first 1,000 companies, the top 1,000 companies by market capitalization, will need to report out the BRSR report. And the most important thing is, while the first year is for the year ended 31st March 2023, there is a comparative requirement. So for 21-22 also, there have to be comparative numbers for almost all the line items. So there are a lot of quantitative details that we can take a look at. We spoke about the Ministry of Corporate Affairs coming up with a guideline. So they came out with 9 principles. These principles are very, they're almost all encompassing. They speak about fair conduct, ethical conduct, transparent and accountable conduct. They also speak about the safety of the products and services that are being provided by the companies. The principles speak to the promotion and encouragement of employee welfare. Similarly, about protecting the interests of stakeholders, ensuring that human rights is respected irrespective of what the management systems are. Similarly, on environmental protection, has the company done enough? Are they taking enough to check any pollution or prevent any pollution or restore any environmental performance? What sustainable means of development are they adopting? Are they actually responsibly pursuing public policy? And if they are advocating specific aspects, is that done responsibly? Are they promoting inclusive growth? And from a public at large, how balanced are they in their development and progress? So these are the key principles. Now these 9 principles came up in 2018, first as a draft and now are fairly well set. But they didn't come out of anywhere. They actually came out of the United Nations Sustainable Development Goals. And those goals were actually 17 principles. Those 17 goals were primarily around no poverty, zero hunger, good health and well-being of people, providing quality education and ensuring gender equality, clean water, clean air, land without toxicity. So it had all these kind of aspects. Now, each of our 9 principles maps into multiple of these goals. So like we see here, for example, when we say it's clean energy, affordable and clean energy, we'll have the safety of the employees and stakeholders and the products and services delivered by the company. That principle touches on this goal. Similarly, you also have environmental protection that goes into the clean energy and affordable environment aspect. The same also happens to touch on public policy. So when we say public policy, to what extent are we influencing the environment? Does the company behave responsibly with respect to its conduct? Similarly, each one of these goals that we have from the UN SDG have multiple aspects to it, which our principles touch on. As you'll see, every one of them is actually taken care of. There's almost nothing that falls within a bucket. And while we have 9 principles marrying to 17 goals, there is nothing that falls within the bucket. This is an example, I thought, of Tata Consultancy Services in its integrated annual report. We'll touch on the word integrated a little later as we go on. But importantly, I just wanted to take a minute to reflect on what companies are doing. So you have these SDG goals. You have the United Nations SDG goals. Against those goals, you have India's principles. Now, when you have those principles from a company, that's at a national level. Let's drill it down to the company level. Now, each company will have multiple focus areas and themes that they focus on. Let's say education, skilling, employment, entrepreneurship, research, water sanitation, basic health and wellness for people, etc. When we have those specific themes against those specific initiatives, the company has got specific programs. So, for example, TCS runs an adult literacy program, which is attuned to the concept of education. They have a skilling program where they partnered with the government of India on its IT education theme. They've also got an entrepreneurship bridge where small entrepreneurs are encouraged and a digital impact square is created. Same thing with basic health. On the theme of basic health, TCS, for example, has got a Cancer Institute partnership at Chennai, where under that they touch on health and wellness and similar principles. So like that, this is one way of displaying, saying that, okay, this is how I marry my specific initiatives within the company to the various principles which align to whatever I would like to focus on in terms of the overall development and sustainable, ensuring a sustainable climate for the entire environment around me. And these go back and touch the overall United Nations goals. So this is the entire scheme, the complete link up. At the base level, you have the initiative, but beyond that, you have a complete list of how it goes all the way up to the United Nations Charter. The statutory mandate in India, of course, says that this needs to be done. Now, as far as our reporting goes, the financial statements are at the center. But today you also have, of course, for a long time now, we've had the director's report, the management discussion and analysis. SEBI, of course, has got the listing obligations. Then we have the risk management aspects. The risk management committee actively manages what the risks are. The secretarial audit takes care of the governance aspect and the board related reporting. Then, of course, you have the social commitments of the company reported under CSR. And now, additionally to all that, you have the sustainability reporting, which talks of the 3 pillars. Each one of these have got its own set of risks. They've all got their own link ups to the financial statements. So, for example, if the risk management committee talks about some specific risk, the financial statements will then have to cover that as part of either the liability or the contingent liability, or at least give a note to that extent. Now, additionally, we have got sustainability reporting, which will talk of climate, environment, and other aspects, which means that the financial statements cannot be looked at in isolation. The statement then, in terms of either if there is a legal obligation or an NGA notice or any other obligation or a risk or an opportunity, we have to talk about that liability, if any, in the financial statements. We will either as a confirmed liability or at least as a contingent liability, but you will still need to have adequate coverage. Not only that, the director's report and the MD&A then also has to touch on it. Because if we mention something in one report, we'll also have to clearly mention that and talk about it the impact on the financials and both the risks and subsequent opportunities that could emanate from that aspect. So, which is the reason why it is no longer an annual report. It's just not a mere annual report with multiple parts and annexures. It is now an integrated annual report. Without that, the entire process will never be successful. As we go forward, we will see how some of these companies have integrated those aspects into their annual report itself. And that's why you now see the word of integrated annual report. So what exactly does the company need to disclose? First, what is the risk faced? Then, what is the mitigation strategy and the financial implications of that? Broadly, these three heads will have to be covered in any of the discussions. And it will have to be covered on three aspects: the environment, on the social goals, and on the entire governance aspect. So in terms of environment, you would touch on greenhouse gas emissions, waste management practices, biodiversity, etc. Sustainability goals, how the company has performed or is performing against each of these. On the social aspect, whether any rehabilitation, resettlement has been done, how many, how are you having, do you have any differently abled workers? What is the workforce composition like? What is the gender diversity like? Do you have a social diversity within that? What are the median wages? What are the turnover rates? Occupation and healthcare aspects. These are all quantitative measures which will need to be touched on in this report. The same thing with respect to consumer related disclosures. This is something new from an India perspective. So far, we have not had the annual report talking of product labeling, product recalls. Product recall to some extent, especially in the auto industry and pharma industry, these are common. But in other industries, it's not that common. Now, additionally to all that, you also have to talk of product labeling practices, the number of consumer complaints related to data privacy, cybersecurity issues that need to be addressed as part of the annual report now. So the ESG model proposed by SEBI, you can marry this to the GRI reports that you've already done under any other standard. Similarly, you can also link up to the Task Force on Climate Related Financial Disclosures, the TCFD standards, or the SASB related standards if you're already reporting it. Now we spoke about the risks, how the company is assessing that risk and the mitigation. So once again, I rely back on TCS, Tata Consultancy Services. They laid out a risk called sustainability risk, climate change and environmental aspects. They looked at the impact of climate change on their company and what is the opportunity that the risk affords to them. Then once they looked at the risk, they said, okay, this can be the mitigation to this. What are the steps that the company is taking to mitigate that risk? And in terms of the market dimension and opportunity, they said, okay, given that this is the risk and this is how we are dealing with it, this could be one way in which we can take advantage of that opportunity and use that for furthering our business. And this is a wonderful example, I thought, of how a company looks at risk, isolates a risk, looks at risk, evaluates it, analyzes it, takes proactive steps to counter it, and then that itself can be a new dimension for business growth. So the BRSR report is not something that can be used as a check the box. It has got huge implications in terms of how to grow the business. There are a lot of the leading companies have done wonderful stuff. Some of their reports are really worth reading, and it will be quite fascinating to read the steps that each company takes. So in addition to the MD&A, this is an area that if as an investor we are evaluating a company, this report is an education by itself. So let's look at the structure of the BRSR. In terms of the pillars, there are three pillars, there are three parts to it. So you have the general disclosures about the entity. You have the management approach for each of these items, which is covered in section B, where you have the various process related disclosures. Do I follow the principles? Have I done adequate enough training for all the people to be comfortable with the various principles, the 9 principles? If I have not done so, then why have I not done so? And then section C is the details, which speak about the principle-wise performance and disclosure, where we get into the details of each principle. That is further divided into 2 parts. What is compulsorily to be done by every company among the top 1,000, and then which is voluntary, where they have said, okay, if you would like to show additional information, please go ahead and do so. Otherwise, it is optional. Now, I just thought we'll take 2 minutes to look at what is the transition that we will need to do from the BRR to the BRSR. Like we discussed, BRR has now been in existence for about 10 years, 2012 till now. So we're all very familiar with the 5 sections of the BRR. In every listed company, we've got the general information being disclosed, the financial details, the other details, the business responsibility related information, and the principal wise performance. Now these 5 sections merge into 3 sections. So the general information is more or less consistent. The rest of the points 2 to 5 are now almost everything is into point number 2 of management and process. Point number 3 is almost completely in addition to whatever we have seen so far, and we have a lot of additional disclosures. The BRR was fairly simple. It was an annexure in the annual report. There was no searchable database. So you cannot go online into the MCA 21 portal and say, okay, I would like to do a comparison of what TC has done with Infosys or Wipro or Tech Mahindra or any other industry for that example. Now, of course, the additional requirement that MCA has said is you have to convert your sustainability report, your BRSR report, into XBRL format. So you have comparison built in, you have benchmarks that will come in once this process stabilizes. So in year 1 itself, as and when people start uploading this, we will start having who are the leaders. Everything is then searchable, everything is then comparable, and you can have metrics and benchmarks plugged in. So everybody will know where they are versus the rest of the industry. And I think that's a wonderful thing to have in terms of setting the standards. The key focus was on qualitative aspects so far. Now, of course, we have a lot of quantitative aspects. Earlier, we had 59 questions and mostly qualitative indicators, words saying, I have done this, I have done that, or we are planning to do this. Now, there are 140 questions, 300 plus quantitative data points. And this is where it really gets challenging. So we'll take a look at the individual sections. Section A actually talks about the general disclosures about the company. Number of plants, number of products, number of services, whether CSR was applicable, what is the level of complaints or grievances, do you have a process? So it's a fairly straightforward thing, and it's mostly similar to what we had in the BRR itself. In section B, it's about the processes that the company follows. So here we will talk about the governance, the leadership, who is the director, who is responsible, what is the composition of the specific committee. Now, what typically has happened is different companies, there is no one standard. So different companies have gone ahead and given this responsibility to different committees of the board. So you have the ESG responsibility sometimes handled by the risk committee. Sometimes it is handled by the CSR committee. Sometimes it is, some of the companies have actually given it to the stakeholder committee because every stakeholder has to be involved. There are a couple of companies where we noticed where the ESG committee itself is now being formed. And you have that as a separate committee, which also has responsibility of CSR. So there are multiple combinations and different companies have done this different ways. But irrespective, the structure has to be that you will have an operations council, the functional team that will then implement this in all its varied contours, that will then report into the committee that is responsible for implementation of the BRSR, which will then report into the board. So that structure is pretty clear. On the stakeholder engagement, this is also a very interesting area. Now, so far, we never had this issue of identifying key stakeholders. Now, the company's responsibility is to identify the key stakeholders. Not only do you have to identify, you have to specify how you are engaging with them and what are the channels in which you are engaging with them. We'll take a look at that. Here, I have looked at one company where we have said, okay, now, in the case of the integrated annual report, I will go back to TCS, but we'll look at other companies also later. Who are my stakeholders? So my customers are my stakeholders. Shareholders are my stakeholders. My headhunters, staffing firms, other suppliers are my stakeholders. Industry bodies and regulators, the government, NGOs, local committees, the society at large, the partners and collaborators of TCS, the academic institutions with whom they have a partnership, and the employees. So all these have been defined as stakeholders. which each of these stakeholders, TCS says, this is how I am going to interact with you. This is how I'm going to communicate with you. This is how I'm interacting with you. So for example, this was part of the annual report. So how does TCS look at shareholders? TCS engages through the annual report and the annual general meeting. This is itself an extract out of one of the pages of the annual report. So it's one of their communication channels. Now, let's assume that you have said you are, let's say, instead of TCS, you are, let's say, Flipkart, as just as an example. Okay, you're Flipkart and you're interacting with them on social media, LinkedIn, Twitter, Facebook, Instagram, and YouTube. You've made this disclosure. Let's take a look at some customer goes ahead and files a complaint. He tweets saying that I went with this Flipkart product, the delivery was not to my satisfaction, etc. He's a customer. You've gone ahead and published in your integrated annual report that this is how you are engaging with them. One of the requirements is how many customer complaints have you received? If you received those complaints, what action have you taken during the year to action out those complaints, to resolve those complaints? And at the end of the year, how many complaints are sitting unresolved? So look at the complexity that the company will go through. Generally for Twitter, Facebook, Instagram, that does not get recorded as part of the ticketing system that the company will have. On the products, if you pick up a Colgate or a Britannia or any other of these products, you will always say, if you have complaints, please write to complaints@soandso.com. That will be a standard. So which means you're establishing that. But that then has to link back with what you put in the annual report. If you have a statement saying that I'm engaging with my customers on my social media, you have to either lay out the limits of that or put your disclaimers there, or you have to then implement a ticketing system or a follow-up measure to convert these feedback into formal complaints that you will then have to action and ensure that you have your metrics in place. So that is where it gets a little bit complicated in terms of actual implementation. And that's when life also gets a little bit more interesting. Okay. We'll take a look at some others. This is section C. This is the most detailed. Now we'll take a look at, for example, the conduct and, what are the various principles? The first one is whether the companies go ahead with integrity and are they dealing with ethical, in a very ethical and transparent and accountable manner. Principle 2 is about safety and sustainability of products and services. Principle 3 is about the well-being of the employees, including those in the value chain. This is very interesting because it's so far not there. The first time India brought this up was when we implemented GST. Now this value chain is being brought in almost every other principle. So the entire environment is being looked at. Principle 4 is about responsiveness to the stakeholders. So we saw what is the protection of the stakeholders, how do we define a stakeholder, and what is the engagement there. Principle 5 is human rights. This is interesting. Most companies that we've seen so far don't have a specific human rights policy, which means when you're actually putting in place a policy, you'll have to also have a policy for human rights, and you have to train your employees in that and ensure that it works properly. So you'll put in place processes that will then tie back to the policies and the implementation of that, and you'll have to capture the metrics of how many complaints against each one of these. Same thing with protection of the environment. And then whether you are influencing public policy, any advocacy, any public influence that you generate, how you are doing it, what you are doing, and how responsibility it is being implemented. And the last one is about CSR and inclusive development. For example, we'll take some specific examples here. So we have this, the second principle, which speaks to goods and services being provided in a safe and sustainable manner. Here, for example, one of the points is about life cycle assessment of the product. So not just when you pick up the raw material, but from the time when the raw material is actually being generated. So if you produce cars, you'll probably start from the time when the metal is being mined to the time when the product is scrapped, and the entire, if it is steel or iron, how it gets recycled. We'll take a look at what, for example, this is a Tata Group company, Tata Tiscon. So in the case of Tata Tiscon, there is one advantage because steel or cotton, for example, are some of the few products that are completely recyclable. You have almost no waste. A lot of other companies don't have that benefit. I've taken, for the purpose of our description, I've taken a slightly easy product. You'll have to forgive me for that little bit of leeway that I've taken. In terms of raw material extraction, so the starting is the raw material for steel. It goes into steel production. Now, when you have steel production, you don't just use that raw material, you also use pre-consumer scrap that comes in from the manufacturing process itself. Then you actually have rolled steel. Those steel rolls, etc., come in, and that's the use phase, which is currently used in either cars, houses, or any other. Now, those rolled steel goes into various, let's say you manufacture a car, you use those sheets, and then it gets into a shape of a car. That car has an end of life. It goes into a junkyard, and at the junkyard, again, you have that steel, which goes back into the post-consumer scrap, goes back into the steel smelting process. This is one example of how the life cycle assessment takes place. Now, in the case of Tata Steel, they've given one more example. In their annual report, they've actually said, okay, these are our various products. For each of these products, these are the projects that we have actually partnered with. And these projects, well, these are not our projects. This could be any other company, but they are our customers. And those customers, we have partnered with them on ensuring environmental effectiveness, or on the Go Green initiative. So this is an example of the life cycle assessment involving the entire value chain that Tata Steel has done. Similarly, another example, responsiveness to all its stakeholders. Now, each of the stakeholders, we are expected to say how who these people are, whether they are part of the vulnerable or marginalized groups, whether there are any channels of communication, which specific channels of communication we are using to engage with each of them, what is the periodicity, and what is the purpose that we are achieving by meeting this. Let's take another example of that. In Hindustan Lever, for example. So this is what they are saying. These are our various stakeholders, the consumers, people, the employees, the customers, suppliers, planet, the shareholders, etc. In terms of customers, so they've given some detail. What are their interests and concerns? How the company engaged with them, and what are the considerations and outcomes? So, for example, in the case of suppliers, and same thing with respect to suppliers and business partners, they looked at the interest and concern of that group. Now, in a business, when you look at your key stakeholders' interest and concerns, you will take specific aspects and you will look at their challenges. You will work to mitigate their challenges. When you do that and you take positive steps to that, the business automatically grows and becomes sustainable over the long term as the process gets stabilized. And that is exactly how this entire BRSR report actually adds value to the process of sustainability of the entire enterprise. Let's take a look at responsible public policy advocacy. This is another area where the company will have to state what are the top 10 trade and industry chambers in which they are members. What is the reach of that industry? Okay, this is, for example, Vedanta. Vedanta now operates in almost one of the most difficult sectors. They are into mining and metallurgy and metals and extraction of natural resources and refining. So in effect, it is among the most difficult of industries from a ESG perspective. Let's look at what they have said. They've said, let's not limit ourselves to just the top 10 that the BRSR report asks us to. They have given additional details. So in terms of industry associations, they are saying we are members of all these industries. Apart from that, they are also a member of these think tanks that help on the environment and climate and safety. They are also partnering with all these academic institutions. Similarly, on different themes, they're working with different NGOs and civil society groups for education and social development. This is a beautiful example of how the company says, look, this is how we are engaging with our people. So it's not just about the specific companies and the specific activities that we and our products relate to, but this is about our society and the environment at large. One aspect that we have to touch as part of the disclosure is provide details of corrective action taken in case of anti-competitive conduct. Now, we know that the Competition Commission has come up with X number of orders, especially in the recent past, against cartelization. So this is another area where this is not Vedanta, this is another company, Shivalik Group, and they were slapped with anti-competitive order. Similarly, a lot of other cartelization issues have come up. We all know that there are multiple issues in industry. Those kind of things also have to get disclosed as part of this. So you have a full disclosure in terms of where the company stands, what it is doing well, how it is looking at risks, how it is mitigating those risks and converting it into opportunities, and what are the red flag areas. Everything is covered as part of this governance report.
Sundar, I had a quick point here, please.
Yeah, sure.
And that's for Arun. Arun,
Yes.
how are we placed in terms of the time?
I have already had a discussion with Sundar. I
Okay.
think he's slightly behind. I think we have got about 5 more minutes of presentation, if I'm right.
Absolutely. I think we're close to the last.
Then we will have around 10 minutes for the questions. And
yes, exactly. Yeah,
sure,
that's
sure.
right.
Thank you so much, please.
That's the plan.
Thank you, Vinay. Yeah. So the social impact assessment is one area which companies have to specifically look at. Now, this is something that the government asks us to implement, right? So they will give a specific notification saying that you have to do a social audit. Once that happens, that has to get published. Today, it doesn't get published anywhere. That is an area that needs to get published going forward. And this is an example. These are voluntary. Both examples of these are voluntary. So you have the social impact assessment report. This report is from Balrampur Chini. It's a very interesting report from this perspective. The report talks about key development gaps based on this assessment. And it talks about education, agriculture, health, and community development. And then it talks of the pillars that the company is taking in terms of those development. And you will see exactly the same heads. So I identified the gap, and then I'm doing something proactive about the gap. And then what is my assessment of that gap? Second example is the H.T. Parikh Foundation. This goes way beyond. Now, the first one was Balrampur Chini, which is in the sugar sector. So they focused on agriculture and the use of technology around that. HDFC is in the housing finance sector. They did something which is far reaching in impact. So this was last year, where they brought up a report on the COVID-19 relief response early on COVID. So this was the April to July 20. Immediately after the impact of COVID, they brought up an impact assessment report. This was a wonderful report as well. And that talks about the social responsibility and the high standards that the group sets. Okay, now coming to the final topic of how do you go ahead? Now all this needs to be done. So how do you go ahead and implement? This is where the real challenge comes. So it's a multi-step process. You first have the UN development goals. Against that, you have India's principles. So far, everything is common for all the companies. Then each company will have its policies. So you have, let's say, against these 9 principles, you will have, let's say, about 50 odd policies which are relevant to these principles. These policies then have to get implemented by various practices and processes established on the ground level. Now, how do you know it is working? You have to train people. Once you train, you have to check whether they have understood the policy and whether they know what to do in terms of practical practice. Once that is done, you will then define the approach and say, okay, now that I have figured out what that gap is the gap material for me to report? So then you will engage with the stakeholders. You will take a data-driven materiality assessment. Now, SASB has got its own materiality assessment standard. India has no materiality assessment standard that has been published so far. So companies have to take a call. An example of that, in the meeting rooms, I have water bottles. If those water bottles, if I'm taking plastic water bottles and I'm scrapping them, is that material enough for me to report? It is an environmental impact, but it is probably not material impact. So those are areas that we'll have to, unless you take a full roster of issues, you will not be able to judge from a company perspective. What is your materiality assessment? Once the materiality is evaluated and you finalize that, then you will have the approach that you will take to manage your KPIs. Once you factor in the KPIs, then you'll have analysis of the KPIs. That is when the metrics will get analyzed. You will know what is good, what is bad, how you're doing. You can benchmark against your competition and industry. And then you go ahead, once all that is done, you have all the information in place, go ahead, write out your report, write out your content, create your graphics, design your report layout, marry it back to your whatever financial disclosures you are going to make in terms of the financial reports, the liabilities, the contingent liabilities, etc. Look at the opportunities, touch on that as part of the MD&A analysis when you touch on these risks. Take it to the board. The board then vets it, provides its input, and then you finally go ahead, publish it as part of your integrated annual report. And for that, you could follow, of course, the BRSR, which you will need to, but you could also touch on the GRA, you could touch on the SASB standards, etc. Overall, this is how you're expected to evaluate this entire thing. We currently use this. FinYes Consulting currently also provides, apart from CFO advisory, we do consulting advisory. We also do risk assurance, including FCPA audits and SOX compliances. We do CFO service, where finance as a service is provided. We provide specific purpose CFOs to companies during crunch times. We partnered with various software companies to help them with third-party risk management and RPA tools. And we also bring in skill building and competency testing for our people. So this is in brief about the entire BRSR, how we prepare our people and how we help companies to get compliant with this fairly daunting requirement that needs to be complied with as at 31st of March 2023. So I'm happy to take any questions.
Wow. Thank you, Sundar. That was a fantastic presentation on a complex topic, and you have been presenting in a comprehensive manner without letting your breath go at all. I really appreciate your sincerity and thoroughness to share your knowledge with all our friends who have joined us together today evening. I have a few questions. I have many questions, to be honest, but I'll just set the tone and then I would like to have more participation from our friends who have joined today. My take on this is the CFO's role is getting expanded to such an extent that his knowledge capability is going to be enhanced, or is required to be in such a status that for him to understand and apply and consider the financial or monetary aspects of this reporting, as you pointed out rightly, either as contingent liabilities or actual liabilities, or as notes to the accounts. How do you think this is being addressed by the CFO? I have come across the recent initiatives by the Institute of Chartered Accountants of India for setting up a sustainability reporting board, wherein they are providing certificate courses to the chartered accountant members to train themselves in the BRSR reporting. Of course, I have not got certified. I would like to have your inputs about its adequacy. And second thing is, I would like you to briefly touch upon the positive, beneficial aspects. You mentioned in the case of Tata Group that they were able to monetize the learnings they discovered through this process. Does it mean that there is a change in the paradigm of running the business, that we take certain elements and learnings out of these goals and then merge it or take it forward and put it as the primary business goal, or it so that that itself generates my ROI and all other stakeholders' expectation? Is the two of the questions I just would like to place it, and I like to have your response for that before kindly I request the participants also to use the chat window to throw out any questions they haven't meant, so that we can collate and then take it across as it comes. Yes, sir.
Yeah. Thank you, Arun. I think wonderful questions that you've raised, and in fact, you've brought up very interesting perspectives. The CFO's role itself has completely changed. He's no longer the bookkeeper. Now, long back, at least a few years back, the most common person who sits in the CFO's chair used to be the controller. It was almost automatic, where the controller over a period of time will get promoted into the CFO. At least that is the world in which I grew up. It's been a few years, and it was the easiest path to the CFO's chair, where I would handle the entire accounting. Now, interestingly, because of the business impact and the understanding of the business, this is now going to throw up a different kind of paradigm. And we're going to have the business finance guy who will probably be a little bit closer to the CFO's chair than the controller himself, unless and until the controller can morph into a business finance professional. And the reason is, every decision, now the MD&A is no longer going to be written by the CEO and his team. The MD&A will then have to be in partnership with the CFO's office itself, which means it is the CFO who then takes a call and looks up all the positions that we have taken for liabilities, contingent liabilities, any other aspects that need to be taken, the kind of disclosures we do for the legal cases. Now, we always factor out which legal cases we want to give to the auditors and which we disclose as part of any annual report. That itself is going to be a little bit different now, because when the legal person says these are the various cases which are there to the auditor, we will have to then look it up and say, okay, the factors of these I have actually considered, or no, I have not considered. Another example is the non-compete agreements or the anti-competitive agreements, the cartelization aspects. Those typically very rarely come into the annual reports, but now they have to, which means they have to be provided for. And all this effectively means that either it is the controller who steps into, who grows his skills, understands the business, and then steps into the into the CFO chair. But also, very importantly, it is the CFO who will then automatically be the next in command to the CEO's chair. So every CEO either has to be on his guard or welcome the CFO as the next in line. So that is another aspect that will definitely change as we go forward. The second point you raised was very interesting about the CA Institute's material and the presentation itself, that they brought up a guidance note, which is outstandingly well written. The board has done a wonderful job. The training and the certification also is extremely valuable. I've looked up the material. I have not got myself certified out of sheer laziness, but it is a wonderful resource which is available to everybody. And I think it is important. It's good that you brought it up. It is important we all take advantage of what is available.
Before I proceed to the chat window for the questions from our audience, I just would like to add one more question on the recent initiatives again of the Institute of Chartered Accountants of India to impose certain liabilities on the practice of ethics by the profession. So how you must have heard, even wherein it is very onerous. I went through the requirements, and then it is wide and very onerous. Would you like to add any comment in relation to this? Such a huge reporting, and then where you had mentioned that there is a dominant must have, and then there is a voluntary part of it in the goal setting. So if somebody doesn't achieve, what is the penalty? How is the CFO liable for it? Or anything of that sort? I would like to understand. So
again, very good point, because it is primarily the CFO who would also sign off along with the board. Generally, all the KMPs would also be equally responsible. Now, the other aspect is, of course, you already have the director's responsibility statement under section 134(5), where every director will need to take full responsibility for all the systems and processes operating effectively throughout the year for the company. Now, in addition to that, you have multiple other disclosures which the people will then need to consider, and much of that emanates out of finance. So automatically the board will rely on the CFO to take full responsibility. Like you correctly pointed out, the CA Institute has also additionally said, not just from the practicing auditor, but also the new set of ethics goes into industry as well.
Absolutely.
Plus, in terms of the practicing auditor, look at it from this perspective. Earlier, I only had to look at specific aspects. I could say, okay, I will go through the board meetings, the minutes of the meetings. I look at the financials, I look at the positions, I look at the broad perspective of the business, and then I go ahead and take reliance I place reliance and I sign off the annual report. But now the audit, one of the requirements of the, I think it was SA 700, but I could have got this wrong. It actually says that every aspect that factors into the financial statements has to be reviewed by the auditor. So in effect, your sustainability report also then has to be reviewed by the auditor. If he has to place reliance on that, he will ask for data, which means that every metric that we report here will also need to be adequately backed up by supports. So it's a new aspect. I don't think companies are really prepared for it. It's going to be a challenge for other than the top companies which have set the tone at the top perfectly well. It will be an interesting time for both the auditors as well as for the CFOs and the directors.
The CFOs, yeah. I'll just go ahead with, I have a few more questions, but I'll come later after I finish off with the chat box, please. I start with Amitabh. Amitabh says it's an excellent presentation worth your sharing with ICAI and ICSI, plus the industry association, to ensure that CFOs be equipped to deal with this daunting task of BRSR reporting. It's a suggestion from him. And second is from my colleague Vineet. In which all industries is ESG applicable? In reality, what is the extent of digitization around ESG compliance by the required legal entities?
Fantastic question.
I'll just finish up that paragraph because there are more to follow. How effective are government's mechanisms, if any, to track and penalize the defaulters who are required to comply with ESG requirements? 3 questions from the Vineet.
Sure. So I'll start off with Amitabh's comment. Thank you, Amitabh. I have actually run a session at the ICAI itself as part of the CPE, in which close to about a little bit more than 1,000 people had attended on the BRSR preparation itself. But you're absolutely right. I think the more number of sessions that are held by the institute to socialize this topic, the better the members of all the 3 institutes will be. The CS Institute has also taken wonderful initiatives. I think it was in the month of August or September when the CS journal actually covered the entire BRSR preparation in fair amount of detail. I noticed it. I could have got the month wrong by 1 or 2 months, but there was a coverage. Now, in terms of the digitization, that's a wonderful topic. Now, the rest of the globe has got quite a few, GRI standards have been there for almost about 20 years. GHG emission norms have also been there for a fairly long time. So in order to comply with this, there is a fair amount of digitization and tools which are available out there. In India, at this point, I'm aware of 4 companies that are in various stages of bringing out tools. These, again, they are not mature. They all rely on whatever has been done for GRI. And they've just taken the GRI standard, they've taken those tools and they've tried to adapt it for the Indian context. It's too early to judge the efficacy of these tools. But at some point, I think as the process matures, we'll have to move beyond Excel files. Excel files are not going to help us in authenticating these backup documents that go into preparation of the numbers and the quantitative metrics behind it. So we'll have to rely on digitization. SAP itself tried, there was a prototype that came out about, I think in July or August, but since then I have not heard back from them. So it is not live in the India environment at this point of time. But yes, there are a few other tools. They're all cloud-based and just about 4 to my knowledge. And they are in various stages. I've seen demos of all the 4. They have their own pluses and their minuses. I think it will mature as we go forward. Sorry, Arun, you'll have to help me with the next question. I missed that.
How effective are government's mechanisms, if any, to track and penalize the defaulters, which again I was who are required to comply with ESG and requirements?
Perfect question. I will go back to the time when the TDS provisions were first implemented. So income tax TDS was initially implemented very nicely, and they said, in fact, the statement in the assembly was the company is in a place where they are going to help the government and perform the government's role. And so you're an intermediary, you're actually helping the government, there is no penalty. That is how the TDS provisions are implemented. Today, of course, all of us know that there are tremendous amount of penalties. If you make a deduction and delay the payment, you will immediately get a notice. And even to the extent that it can be compounded only 3 times. And after that, you have to, it is even goes up to the level of imprisonment.
Oh.
So Income Tax Act has gone into a various level of detail. What the government has done is exactly the same approach with respect to the first year of BRSR. There is no penalty. So in the first year, 22-23, there is absolutely no penalty for any reporting. Having said that, the director's responsibility statement covers it. So under that, whatever provisions are there will continue to be applicable for this. But for any mistake in the reporting, the government has not prescribed any specific penalty. I think their approach is going to be very similar to what happened in the TDS provisions implementation long back. And we will definitely see. I think the first step to that is where they have said everything has to be in comparable format, machine readable format. And that's why they have asked us to implement XBRL for this. It's a matter of time.
Okay, we are now. Next is from Meenakshi Sundaram. It's a fine presentation. Is there any requirement of benchmarking of various metrics against industry standards?
There is no compulsory requirement, sir, as far as the BRSR report itself goes. However, who is going to read this report? It is going to be the investors, the analysts, and then the investors. Now, they are going to read every one of this from the various, they're going to compare. If let's say, India Cements versus Aramco versus Shree Cement versus an Ultratech or Gujarat Ambuja, everybody is going to sit there and compare. Okay. And then they are going to rate us in their own ways of doing the metrics. So to that extent, I think benchmarking will automatically come out. It is not something that the government is asking us to do, but it is definitely something that we will be under pressure to do from the investor perspective.
I would like to add to Sundar to the extent, correct me if I'm wrong, Sundar. The current BRSR parameters framework has in it various levels of ranking based on quantitative metrics of performance of the selected goal or objective. So in that itself, there is a relative ranking which is being made, and then each the score is built out of that. So automatically you get a score for a company. So you get A company has this score, B company has some other score, then automatically you get into a benchmarking level. So you know what is the best achievable also under that particular each of the parameter is one aspect I would like to point out. Correct me if I'm wrong.
Absolutely right, Arun. Yes, it is built in for each company, and automatically that will lead to scores.
Thank you. Next is from Jatin Luthra. It's very educative. The requirements look daunting, and hence the need for close partnership with the managing director and the rest of the board of directors is very clear. He is affirming whatever you had already told. And from Lakshmanan, echoing the views of our excellent presentation. Thank you, Sundar. And from Nitya Srinivasan, very informative session. And David Toon, thank you for the insightful presentation. Thank you, David, for joining us so early in the morning. From, I presume you must be across the world on the west. From Ramesh, thanks, excellent presentation. Can the presentation be shared? Yes, of course it is.
Certainly.
And yes, and I think Charlotte has already answered. Now, anything more to add?
I just want to ask one thing, Arun, if I may please. It's for the professional community. Is there any like formal, course or certification required for professionals to, monetize this opportunity, or is it like just by our own learning and doing a deep dive and collaborating?
At this point, nothing is mandated. Okay, the CA Institute has got a very, very educative course, an extremely well structured course. That is as far as India is concerned. I'm not aware of any other courses from an India perspective. Again, I can stand corrected if I'm not aware of anything that the CS Institute or the IC or the CMA Institute.
I have no idea, honestly.
So this is one I'm aware of. which is actually very good because I've seen the material and I've actually relied on the guidance material as I prepared for this entire thing. Globally, there are a couple of courses. Yeah, sure, Amitabh.
Sorry to interrupt you. After you finished, I will add a comment. The Indian Institute of Corporate Affairs is doing a
Oh, that's good to know. I was not aware of it.
On
Thank
this
you.
ESG and also on the BRSR. Yes. Okay, sorry to interrupt you like this.
No, appreciate the input, Amitabh. Thank you for adding in. I was not aware of it, so it's valuable information. Globally, there are quite a few courses. The names don't come up in my head, but I can pull it up and share it with you. There are quite a few certified courses, but I'm not aware of anybody in the world insisting on practitioners to have those courses. They definitely are a value add, but it's more about how you can tie up. It's not theoretical. The entire thing is extremely practical. So it's more about the experience and the thoroughness of the activity rather than the certification itself. And that's where this entire thing probably will mature over a period.
Sundar, I would like to add two questions, if time permits. One is where does India stand in relation to the global reporting standard so far that has been pronounced as mandatory for various corporates across the world? Where do we stand in terms of the requirement? And the second question is, how are these reporting frameworks dovetailed with the credit rating agencies' requirement to build up an index of, basis certain parameters, assessment of certain parameters, and for inclusion and exclusion and reporting them as a company to be invested under ESG program is what I would like to know.
Yeah, fantastic again. See, the first one is India is probably among the leaders in terms of the sustainability reporting initiative. In the US, it is not mandatory. Most of the companies report, but that is because the investors ask for it. And that is the reason why they've been using the GRI standards primarily. So wherever the US has relied on the investors to push. So if the investors need it, they will ask the management and the management will then provide these details. That of course is changing. SASB is coming up and it will slowly evolve over the next 2 years into a formal set of guidelines, which will probably be industry specific. Like in the US, most of it is industry specific, and that is how this will also evolve. That is the structure of the current SASB reporting requirement also. Having said that, interestingly, China has got a very, they were probably a little bit ahead of us in the game. Environment in China is actually very, very bad. I have not been able to get those documents translated because it's in a language that I do not understand, but they have prescribed specific formats for environmental reporting. So if we have a subsidiary in China, we may have a good information about that particular requirement, again, for the listed companies. The UK brought up a set of requirements, but that is only with respect to climate and environment, like most of the other Scandinavian countries also. In that sense, the Scandinavian countries and the UK have that in common. Canada also talks only about climate change when their requirement, what they have mandated for these standards. New Zealand and Australia have another set of standards which are just coming up. It's going to come up now. It's in draft stage. They brought it up, but it's not yet formalized, and they've laid out what they are looking at.
Do you believe sorry to interrupt, just like that. Do you believe that as time goes forward, we may have an IFRS for the reporting requirements?
Bound to happen. Absolutely bound to happen. The standards are converging. And in fact, India itself has taken that step. India had the first step was to say, okay, if you're already reporting under GRI, you just have to lay out that and say, okay, this is what I'm doing under GRI. But there is a word of caution here. It's actually not that straightforward. So GRI standard, for example, when it talks about accident reporting, it's a metric, right? It's not the man hours alone that gets reported. It's a metric that gets reported in terms of ratio. The GRI standard offers flexibility. it says when you are doing accident reporting, you have an option of saying your denominator is 100,000 man hours, 500,000 man hours, or 1 million man hours. So based on that, you will provide the ratio and you will say, this is my metric. Interestingly, in India, our BRSR report says 1 million man hours only. Which means while you may be able to tie up saying I have already reported under this, you have to be very careful because the denominator there is different from the denominator here. So your metric may be completely skewed. So it's important companies understand what they are reporting before they report. Like this, there are X number of areas where we find it quite interesting and where companies have to be a little bit careful in terms of this thing. But principally, I think the MCA and SEBI have been very clear. If you're already reporting, to the extent possible, don't rework and don't recreate the wheel.
There is another comment I would like to share from Jason. Excellent presentation. I will appreciate reading through the slides to further understand a greater level of the details. Thank you, Jason. We look forward to for the inputs in the once the video is hosted in the YouTube, probably you can watch and then people can the participants can add their comments also. In my opinion, I think it should be possible. Charlotte can correct me if I'm wrong. And the suggestion from Amitabh, thank you Amitabh for your suggestion. Amitabh says, Sundar, when you next interact with MCA, ICAI and ICSI, it should be emphasized that a BRSR should be made mandatory as part of CPE, continuing professional education certification for all professionals in industry and practice. That's
a good idea. Very good idea, certainly.
And included in the syllabus also. So of course, yes, they will certainly
yes
have it, I think, in due course of time. Sundar, it's been awesome. Anything else to add, Vinny? You would like to?
No, absolutely not. The only thing we should add now is thank you, Sundar. It has extended much beyond we had anticipated. A topic which is like close to the heart of a lot of us, not just as professionals, but impacting everyone across the world. So very sensitive, but very sensitive topic at the same time, very informative for all of us to interact with. Thank you for your participation today.
Thank you all participants for a great evening. I really welcome and look forward to you for the next discussion meeting in the month of December. In the early December. So
yeah, 9th December.
Yes, you're right. 9th December. Anyway, that will come up. Thank you again, Sundar and all for joining us today.